Hi, everybody.
Hello, everyone. Whoa. Hello, Cleveland.
Well, hello. We brought a municipal bond from the city of Berkeley, where Vice Mayor Bartlett is doing amazing things.
Right on. Wow.
Hello.
Okay.
I have a picture of it. There it is.
There we go.
So is somebody going to talk to us? Or
Yeah, is there a host? How's this work? Who's in charge here?
Yeah. We were told to come and do a fireside chat, but we didn't think that...
Is there a moderator?
We can chat with each other.
We can chat.
How's it been going with you?
Pretty good, pretty good. It's been a really crazy day. Yeah.
Just a fireside chat between you two and talking about what you guys are doing.
Cool.
Okay, all right.
So maybe start with the slides or however you want to do it. But yeah, we didn't have a moderator as far as I know.
Oh, got it.
Okay.
Excellent.
Excellent.
So
Perfect.
tell us about your vision then for the city of Berkeley and offering the world's first blockchain-based municipal bond.
Well, Jase, thank you for having me here.
You
and
bet.
thank you for coming here, too.
Of course, and thank all three of you for coming, too.
And thank all 11 of you. So here's the deal. What's going on? Here's what's going on. Okay, good. We'll get to that. So here's the context of this thing we call microbonds, these bonds on the blockchain. I'm a lawyer. I entered public life after my mother and some of their family members were displaced in an apartment building. And when I went to go find senior housing for them, there was none. There was a 17-year wait list.
Oh, wow.
And so when I looked at it, I was like, okay, there's $1 billion surplus here not being spent. And so there's no money to make housing. So I was acutely aware of the suffering going on. And the more I looked into it, I saw it's part of a larger global issue. There's a population bulge. The millennial generation is the biggest in history. And our built environment has not expanded to meet them.
Right.
And at the same time, you have a low tax appetite. So California has 150,000 homeless people. And Berkeley, my town, has 1,400. So, we decided, look, we can either accept the status quo, which is now an emergent status quo in the Trump administration, where they're defunding the mechanisms that take care of people and provide stable environments and stable economies through the tax equity finance bottoming out, also through defunding HUD, et cetera, et cetera. So we said, okay, well, we can accept that, or we can go our own way and create something new. And so we got together with our friends at Neigborly, our local people here, and thought up a way I'm actually going to tell you really, you would probably get the details of it, but we thought of a way to create money where there was none, and also to create community buy-in and really solve for the dilemma that I'm looking at, really, is the zero asset problem. The zero asset problem is this. They're saying the next generation will own zero assets. No physical assets, no houses,
Wow.
and also no economic assets, no stocks and bonds. So how can we solve for that, take care of our people, and save the future from a zero asset wasteland? And what we came up with are the microbonds, which Jase here is gonna do.
Oh, that's excellent.
Yeah, and I'll explain how it fits in the next chapter when we talk after you.
Yeah, definitely. Thanks for shaping the future and helping to bring a 2-century-old market into the 21st century. And we're excited to talk to all three of you in the audience about it. And it's gotten some really good popularity, and there's a lot of articles floating around in the media about it. And it was good to hear from you directly the vision that you have for it. And Neigborly is a technology company that's in the business of building software that helps modernize public finance, which is the $1 billion per day market that builds vital public projects like in some cases, the senior housing that your family was displaced from. Mm-hmm. And it's really interesting to hear you talk about the upcoming zero asset prediction of the next generation. And I wonder, what is the perspective on public assets? Because public finance is something that enriched our nation. It's the humble municipal bond, this type of instrument. This one's from the early 1900s from the city of Berkeley with all the coupons intact, and it's signed by the mayor. It's a power of attorney on the document. You own the bond if you own the certificate. It's this expression of connecting to the community. was a uniquely American invention that helped build vital public projects, right? And I was curious, like, what do you think you have in mind for your bonds? What are you going to do with your micro bonds?
So here's the deal. It's a three-step sort of apparatus that's meant to be a manifold for the state and the country and the world to address these issues of assetless future. So by offering the municipal bonds on the ledger, on the blockchain, you can disintermediate the process, lower the cost of issuance tremendously, and also open up issuance to other entities besides the government. Private homeowners leveraging PACE financing, which also came from Berkeley 10 years ago. PBIDs, business improvement districts, project developers. Now, when you issue the bond on the blockchain, you can also provide greater targeting due to the savings. So you can do smaller things like one building or one fire truck, which is our pilot coming up.
Cool.
You know, and then also the lower threshold of entry. You know, a municipal bond costs $5,000, and that's the minimum. The average is $100,000. That's what they prefer. So if you could issue a bond at $25 to acquire property in your community, you have in one fell swoop solved the assetless future. You have financial assets, i.e. bonds, and you have physical assets owned by the community and people. And the next step, going further, the interest payments are tokenized. And they become a smart, programmable local currency to drive local business, drive local building, build community, to help homeless people, help kids do spelling bees, you name it.
Oh, nice.
And herein is the larger manifold, because my agenda that I'm really focused on is using this template that we create together in Berkeley to really rebuild the global economy along beneficial lines. And it's all in this one profile, because one, you have asset ownership, for one. Then you have the smart programmable currency. You know, there is $600 billion right now in impact investing in a column waiting to be deployed, but it can't find a home due to the impossibility of compliance. So you have all these family offices, you know, the generation is passing away, giving its wealth to the new generation, and they're setting up family offices, and they want to invest in carbon-free futures. They want to invest in conflict-free commodities.
Sure.
But they cannot ensure compliance. So on the blockchain, you can predefine a targeted route of investment and expenditures and essentially go beyond compliance and program the transactions years in advance.
Nice.
So that's a smart programmable currency to create a whole new market that can move the economy in a more positive direction. And the third point, of course, is data sovereignty, right? So we talk about the need for UBI. One way we could do that is to give people the right to own their data and then actually access the 170 different times your data is auctioned off each day. You could be at each auction and control that auction and get $200 a month. So therefore, you have passive income streams that you control, you have programmable currency to develop new economies, and you have asset-rich communities. That is what we're doing in our little project in Berkeley.
Excellent. You mentioned impact investing. Is anybody in the audience in the impact investing community? A couple of you? We just have this saying at Neigborly that municipal bonds are the original impact investment.
Yeah.
And so it's really lovely to hear you talk about the connection of those two concepts, because there's the rise of impact investing, which is in the trillions of dollars globally at this point, and then you have this humble municipal bond that's for 2 centuries before that was a term funding things like vital public projects like schools and libraries and parks, and also we think it can and it should fund next generation infrastructure. The resilience projects and the affordable housing projects and the centers like Pathways, what you guys are building, that's a visionary project for helping homeless folks reconnect with the economy. And we think that there's a direct path between the market that can and should serve public finance and you and your vision.
Absolutely. I mean, this is it. This is the moment where we're at a fork in the road. The status quo is officially failing us. When you have 150,000 homeless people in one state, and it's projected to grow by a factor of 5 over the next 3 years, that is failure. So the old systems are in need of an evolution. And that's what we're doing here. From a business point, a technology point, and a policy point.
Yeah.
Driving change in the future to create a more noble future that works for all of us.
Yes, sir.
You had a question?
What questions do you have?
First of all, I am displaced Berkeley. I have 15 years there at the university in Boston. And I'm here to write about.
Oh, here we go.
I'm here to write about exactly what you're talking about.
Excellent.
And in particular, the concept that blockchain can revolutionize the finance. And I think you have a tailwind because in addition to the concept of that you would eliminate inefficiencies in the market, you would also eliminate a lot of the market abuse and market fraud that happens over the electronic markets, which will give you a tailwind. But let me turn to my question, because I think you guys are really onto something, and municipal bonds are the perfect cutting edge for a broader, let's say, displacement of trading. And municipal bonds has a particular unique need, I think, to be traded over as securities over exactly what you're talking about. But the problem is there's a lot of pushback coming from the SEC. And I think perhaps even from Wall Street. So how are you getting around that? I mean, how are you guys dealing with the SEC and perhaps you're treading on somebody else's territory right now.
Sure.
You know, there's some vested interests out there.
You're right. You're absolutely right. And our way of getting around it is to not get around it, but to embrace and to have conversations with regulators. So, for example, we're a technology company that uses blockchain. We don't describe ourselves as a blockchain company, right? But we use blockchains to solve certain problems. And you identified several of the interesting areas where blockchain can be of service to finance, especially in public finance, which, of all the asset classes that you can think of, municipal bonds ought to be on the blockchain, right? And it's a intensely regulated market already. And then there are lots and lots of scams and con artists doing things in the world of crypto that have sort of tarnished their reputation. But they've also helped to present to regulators the ability to build up antibodies and to build defenses against such attacks. And that once they realize that technology is actually really good at helping them do their jobs, which is to protect investors and to open new markets and to make sure investors are safe, then suddenly they're very open to it. And in our case, we don't go around, we embrace. So 2 months ago, we went to the SEC in DC. It was supposed to be a meeting with a few of their folks, and it turned into 20 plus folks to talk about how exactly does this work. And we want to build it in a way that helps them to do their jobs more effectively, which is protecting investors.
And I can also add to that too. So I've taken, just myself, my office, I've fielded no less than 15 calls from major bond delivery entities. Major ones. They all want to know how we're going to do this. They want to be a part of it. They recognize the need for trillions of dollars of capital to be deployed in new markets because we're at a stasis point. And the infrastructure, as we said earlier, is in desperate need of build out. So they're seeking a home for their capital. And they see the next frontier as the people. So they're into it. And the calls come around the world even. Paris, Italy, South Africa, London, New York, Miami, Chicago, LA, Seattle. This is a wave. There's already $580 billion in this economy already happening. This new crypto economy, and they want a piece of it. That's why who's the richest guy in the world?
You are, man.
Not me. No, you are. His family office. He's just going to announce trading it. It's happening. Soros. Yeah, it's happening now. This is it.
Maybe.
Well, first off, yeah, this is different. These are bonds, right? Debt instruments. They don't go up in value. This is a different deal, and your people should come talk to us because we created PACE financing in Berkeley. We have a different sort of track record for innovation.
You're right. There are stiff regulatory headwinds.
I mean, I'm on your side, and I'm writing that it should happen.
Let's get a new question too.
That says that
We'd love to circle up afterwards. I think we're getting kicked off. We got the cane coming from stage right here.
Who else?
So.
Anyone else?
Who are you people?
Yeah.
There we go.
How about Puerto Rico? Can you do something there?
Heck yeah.
Yeah, for sure.
Working with Digital Currency Initiative on some cool microgrids, community solar microgrids so that communities can own their own energy. The problem is PREPA and the $7 billion millstone that's in receivership and the Title III that's debtor in possession status filing from the hedge funds that brought the place down in the first place. They can't let communities own their own energy because that's the last of the revenue streams. So
It feels to me, I'm not an expert at municipal bonds, but if you need to get from crypto out to fiat, how many solutions are there today?
crypto out of fiat.
Crypto
Get fiat out of crypto. How do you get the portal out? From
Well-
even municipal bonds, right?
I really enjoy conversations so far with the folks at Trust Token. It's not an endorsement of what they're doing, but they work to build some of the innovations that Tether brought as a stable coin, but with the commitment to audits and open books and publishing every month through Trust with fiduciary duty, who report out onto the chain what is the holding of each balance of crypto versus cash. So, it's definitely not fiat out of crypto, but as an important bridge and as first step. It's still the early days, right? We witnessed a Cambrian explosion of really interesting crypto species that came about over the last few years, and we think that the one that we're building over in Berkeley is a really interesting first example of this type of instrument. But of the thousands of projects that came about, they're all less than 10 years old. And the markets that they're sort of coming into and being hardwired into are centuries old in some cases, like municipal bonds. So it's new, and so it's not exactly crypto out of or fiat out of crypto as you asked, but it's an important step in the right direction. So I think we're off time. Yeah.
That's
Good.
it?
Sorry. Yeah.
Well, that was quick.
Thank you, all three of you.
Thank you, guys.
Yeah.
Take care. Woo.